Hey listeners, it's Paul Andriola here. Why not join our community at Small Cap Discoveries, where we offer our members direct access to some of the best microcap investment opportunities available. Our members are getting access to premium microcap financings, research reports, and direct access to management. Sign up today at www.smallcapdiscoveries.com.
Hi, everyone. Welcome to the Small Cap Discoveries conference call. Today on our call, we have the CEO, Bill Nardo from Pivotree. Pivotree trades on the TSX Venture Exchange under the symbol PVT. The company is currently trading at $3.50 with roughly 26 million shares outstanding, or about a $93 million market cap. I'd now like to hand it over to Paul Andriola.
Hey, thanks a lot, Trevor. Great to have Bill with us today. Pivotree, company that's been public for just under 2 years. So we're going to get a chance to really get a good understanding of what the business does. Likely, very new to a lot of listeners today. But Bill, thanks for joining us today. And now, usually we start with the presentation, but we've got something a little bit more special. You've got a video you want to show us. So why don't we hand it over to you, start your video, and then we can jump on the presentation.
I really appreciate that. Yeah, I think the video will help set the context for some of what I'll cover in the presentation today, and hopefully it'll spark some questions for folks too. So why don't we kick it off with that, and then we can jump into the presentation.
As a leader in frictionless commerce, Pivotree designs, builds, and manages digital platforms for commerce, data management, and supply chain for over 250 major retail, branded manufacturers, and distributors globally. Our digital solutions, along with managed and professional services, provide enterprise customers with a frictionless end-to-end formula to support and manage complex digital commerce platforms.
The first problem that we identified was consent and trade management. The problem is around denied party lists in trade embargo countries. We were able to automate the flow between checking somebody whether or not they're on that denied party list. If they came back and the denied party check was cleared, they would move onwards towards sales, marketing, and shipping and handling. And if they came back as a denied party user, we would cancel the transaction immediately, send a note to that particular email address on file, and follow up automatically with the seller. So what you're going to see here is our third-party seller management product that we built for one of our large retail customers here in North America. They needed to bring third-party sellers into their ecosystem and expand how many products they had, how many SKUs they could offer their customers without flooding the balance sheet. So what we did is that we engineered a product for them that allowed for this to happen. And we've had incredible results of over 23,000 SKUs added to the website in e-commerce, over 202 vendors, over 200 additional orders per day that actually accounted for $10 million of additional online revenue.
Supply chain costs account for about 12% of total business spend right now. And over the last 12 months, they've grown by 12%. Brands are very publicly struggling with visibility, availability, and execution problems that hit their bottom lines. So the question is, how does Pivotree help with these problems?
Pivotree WMS can greatly improve the warehouse process and operation, deliver even greater savings to our target market. Our product platform is a unique blend of modern technology, open architecture, and rich functionality. The application has been serving for more than 2 decades, and many of these customers who are using the application are Fortune 100 companies, and they're shipping tens and millions of parcels a year.
The Digital Solutions Group, we're thinking about ways to build new products and services, drive more recurring revenue for our business, and we take those products and services to market through our business.
Reliability is part of our next generation of managed support services, which we've designed with customers that are running SaaS commerce platforms in mind. That these brands lack the ability to detect, diagnose, and resolve performance issues on their site, and those performance issues have a direct impact on their top line revenue. So what we've done is we've designed a package that leverages 24/7 digital monitoring to track the behavior of all customers on the site, as well as the performance that they perceive from the website. And then we also leverage AI-driven anomaly detection to quickly determine when there's a degradation in that performance. And then we have a team that can step in and help resolve. What that allows us to do is provide up to a 90% reduction in the time it takes to resolve revenue impacting issues, and therefore saving revenue and reputation for our customers.
Companies who conduct business online are under a constant threat of a data breach. At Pivotree, we believe that we assembled the right people, technology, and process to reduce the risk of data breach at a lower cost.
This table shows 16 threats were detected in this very focused period of roughly 30 minutes. Fortunately, we are leveraging machine power to quickly detect, investigate, and actively mitigate threats. In this example, we automatically quarantine the threat in less than 1/10 of a second.
Billions of dollars in revenue get lost due to having less or no visibility into your transaction. Two engineered products from Pivotree, Connect, which is our integration solution, and Control Tower, which is an observability layer, working in combination to help our customer retrieve that lost revenue. Pivotree Control Tower is a unified dashboard that provides global analytics and near real-time observability into customer commerce ecosystem. Pivotree Connect to a deeper level into the Control Tower system, where we can capture, report on real-time order flowing between third-party partner systems.
At Pivotree, what we have evolved into is a product that is data as a service. Organizations are no longer asking themselves, should we monetize our data? Is this actually a thing? And it's now turned into how. How do we monetize our data? We have built a 100% self-built IP turnkey solution for our customers. We build out this software to accelerate and scale all of the things and the business value that we accomplish for our customers.
We believe we're living in an age where every buyer expects consistent experiences that meet their own personal expectations. Pivotree is investing in and accelerating this new era of frictionless commerce with digital solutions that help companies apply this thinking holistically throughout their entire value chain.
So thanks for watching the video. It will start to make more sense as we talk through what we do for our customers, but the message here really focuses on frictionless commerce. And so some of what I'd like to share with you today is we've got a big vision, a big mission. We're very ambitious about what the future over the next 15 to 20 years is going to look like. But you're also going to see that we've got a real business today. We're in solving customer problems right now, and we're trying to get them on the path to this frictionless future that we've envisioned for ourselves and our customers. So as I said, and as I started with, we have a vision. It's not only us. We believe the future is going to be a place where commerce is truly frictionless. You see it already evolving over the last even 20 years when e-commerce really start to hit the scene and change the way we perform our transactions. We think the next generation and evolution, which is not just on a browser, it's how you experience it in the store, in your home. Frictionless commerce is about commerce everywhere. This is going to happen with or without us. This is a vision that we share with many. Our mission, though, is to make it easier for businesses to move towards frictionless commerce. Many of our clients are getting affected by others around them that are accelerating this, and they're looking for help to drive the adoption, the design and development, and the ability to implement these frictionless commerce solutions in what is a rapidly changing marketplace. Now, we aspire to be a North American leader, eventually a global leader. I think today we're certainly getting a monopoly on the word frictionless commerce. There are lots of folks that call it other things, but there really is an opportunity in the marketplace for us to dominate. The way we're going to win really boils down to four key things. And you've seen, if you're paying any attention to what we've been doing, you've been seeing us execute against this strategy. Frictionless commerce is about more than just e-commerce. There's a number of what we'll call growth categories that enable frictionless commerce. And for us to successfully implement a frictionless commerce system for our customers, we need to be able to play in all of those categories. Last year, we acquired our way into the supply chain. We doubled down in data. We were already strong in e-commerce, but we need to get to scale in each one of those categories. And we've been doing that through a combination of organic and acquisitive growth. Now, as we have the skills and the expertise in each of those key areas, we need to then strategically leverage in enabling technologies, the things that are converging today to make frictionless possible. Internet of Things, machine learning, artificial intelligence, augmented reality, all of these things are enabling technologies. And it's important that we can bring these types of tools into those categories and move them along the development spectrum. And really, to help our customers adopt these, we have to package them up and productize. And I think this is where some of the confusion in the marketplace is today. The market sees us as a version of a professional services or systems integration firm, but our philosophies are really grounded in productization. We use professional services to help our customers overcome today's technical debt, to understand the problems they're trying to solve, but ultimately, if we're going to help them, it's going to be through productization of a lot of these capabilities. And then the last piece of it is you're going to see through some of what I'll share in a moment too, that a lot of these categories currently are discrete, they stand alone. The competitors that live in each of those categories tend not to cross over. And even inside the companies that we work with, they're discrete categories with different leadership. Again, to really deliver a truly frictionless experience in the future, we're going to need to build that connective tissue between these categories. So for us to win and be a market leader, we got to get scale in the categories, leverage the enabling technologies, package it up as products, and build the connective tissue between them. Now, with a big vision and a very ambitious one, many of us lived through the dot-com era where people could give great PowerPoint presentations, but they were far from being real businesses. We certainly are the opposite end of that spectrum. We're a very real business today. We are doing more than $100 million of revenue now, annualized. There's more than $10 billion of gross merchant value that runs through the systems we work on. And again, just to reinforce, while some folks seem to lump us into a peer group with professional services, more than 40% of our revenue actually comes from recurring revenue, managed services, and those products that we've been starting to show. We've got more than 600 employees around the world in a number of offices, North America, Europe, strong presence in India, and a growing presence in Latin America. A lot of that has to do with going where the skills are. Most of our revenues are concentrated in North America and primarily in the United States, but you will start to see us grow our revenue around the world as well, because many of the brands we work with are global brands. We've got a pristine balance sheet. There's no debt on it today. We have still strong cash left from the IPO and even after some of the acquisitions we've completed. And we also have a great facility with a major Canadian financial institution that will allow us to continue to do acquisitions beyond our current cash capabilities. I've been fairly clear with the market. I won't put debt onto the balance sheet until we're fully and strongly cash flow positive. I don't want to use debt to pay my debt, but we do have a strong facility and a good relationship, and again, a pathway to continue the acquisition strategy. So again, we often get asked that question, explain exactly what it is you do for folks. And we are, again, in the business of frictionless commerce. And that's a method of using data from devices, apps, websites to integrate buying opportunities as simply and as seamlessly as possible into customers' everyday activities. Again, everywhere you go now, increasingly is an opportunity to buy and purchase in context. We are a trusted digital commerce service provider for market-leading brands, large branded manufacturers, retailers, and global distributors. And we design, we build, and we manage their commerce ecosystems. We really create that frictionless experience across the entire buying journey. So again, we're not consultants. We don't put PowerPoint presentations together and hand them to customers and say, this is what you should do. We gather requirements through professional service type work. We understand where they're starting from, where they're trying to get to, and then we help them build that journey to get to that experience that their customers are demanding. We do it in three core categories that I talked about earlier: commerce, data management, supply chain. Again, commerce you would think of as the shopping cart, the user experience. Data management is that flow of data that lives underneath all of these applications. And frankly, the future of frictionless commerce depends heavily on highly automating that data supply chain. And then supply chain is really the logistics piece of getting what it is you ordered. In those categories, that's where we generally face our customers, and we do implementations, the design work and the build, the configuration of platforms for them. And we often are using industry-leading technologies like the ones you see at the bottom of the screen. So well-known technology solutions, but we're the folks that make those solutions work for the customer and the specific needs of the customer. And we also have a digital solutions overlay to each of those categories or those business units. And that's where we build those products that you saw earlier. This is where we do our managed services, and again, have more of that, and I'll talk about it in a sec, but more of these compiled solutions and engineered solutions to make it easier for our customers to get the most out of these systems that we run for them. So really 3 categories that we go to market on, and they're the major categories to deliver a complete ecosystem of commerce, and the digital solutions that are really going to drive the long-term adoption of frictionless. So when we talk about products, we have really 2 types of products: assembled products and engineered products. Assembled products take existing solutions in the marketplace, put them together. Quite often they're complex ecosystems. Customers could go out and find many of these themselves. If they had the staff, they could stand them up and integrate them. But what we do is we bring them together as a package solution, and we sell the service back to the customer. So assembled products really are third-party applications we integrate, bring together, and sell as a service rather than as a professional service. Our largest piece of business is recurring revenue in our managed service around Oracle ATG, but it really is much more than just the core ATG app. It's all of the components around monitoring, managing, maintaining, and securing that environment. And we sell that back as a monthly recurring revenue business model. Engineered products are the ones you would typically think of as pieces of software that we build. We write the code for it, we package it up, and we sell it as a piece of software. Many of our engineered products today are actually being used by our professional services teams to deliver services to customer. It's actually how we start many of them. We're the first consumer or customer of them. And as we harden them and as we get more reference points and make sure that we've built the product the right way, we then can start to move that out and sell them as standalone or independent systems. You won't see a lot of our engineered products showing up on our revenue line today because they are buried in the way we deliver professional services, but it in fact does differentiate even our PS work because we get the benefit of these engineered products in what we do for customers. Usually leads to better margins, faster, more complete, and less errors in the work we do for customers. Again, one of the reasons that we're very bullish on what it is we're doing is the tailwinds in very large segments. Retail and B2C is a $4 trillion marketplace annually. The customers we work with, the largest, the top 1,000, account for 55% of that GMV. This is a very, very large market. And every year you see the trend that more and more of those revenues are digitally assisted. We don't play in SMB. We're not, companies that natively might only sell online. Our customers live in the top 1,000. They have stores, they have legacy systems. We help them overcome their history in order to become more efficient in this frictionless commerce future. But there's a lot of tailwinds and continued spend in that category. B2B is 17 trillion and is actually going through an even greater evolution and change around driving frictionless through automation. And we're seeing a lot of the work we're doing today are large B2B actually now looking to move B2B to C, get closer to their customers, and they really need to go through this digital transformation to be able to affect that change. Very big markets with a lot of spend that's been going on for over a decade and will continue for the next 10 to 20 years. And I say that without hesitation. Any trend that you look at, any analyst you talk to, this is going to continue to be a category that is moving towards digitization. Pardon me. We're uniquely positioned in at least one regard. Each one of those categories that I described, you'll find competitors who do professional services and systems integration work. Some of them are well-known brands to many, I'm sure. Others are boutiques, smaller, not dissimilar to perhaps some of the companies we bought or where Pivotree started 4 or 5 years ago. But there is nobody that you can see that plays across all of those categories, and certainly no one that's really trying to transform the experience from a professional services engagement to more of a product-oriented engagement. So we're one of the only ones that does managed services in all of these. And again, we're one of the only ones that participates in all of them together. But you will find, unquestionably, people who use similar language and do some similar things to what Pivotree does, but we are uniquely positioned to deliver an end-to-end frictionless commerce experience. And you can see that in some of the results that we've been really starting to pull forward now. Our bookings numbers have really doubled in the last couple of quarters over previous years. Some of that's the benefit of getting the additional category capabilities. Our customers are buying more from us. So once we land one, we tend to expand and are able to do more for them. And again, you can see it in our revenue climb as well. So, coming out of COVID, there was a lot of things that weren't necessarily normal or predictive of the long term. But I think now you're starting to see in the last couple of quarters much more predictable results from us and evidence of where our customers are spending more money in their digital transformation. So really strong organic growth combined with very selective and effective acquisitive growth. And I know one of the big trends of late that has started to change is growth at any cost, really isn't the first order of business. Profitability has increasingly become one of the key themes that all investors are looking for, particularly in this changed marketplace. Companies that have more control over their destiny are the ones that don't have to go raise more money. And I think, again, when you look at what we've been doing the last couple of quarters, really shifting towards EBITDA positive. We're somewhat EBITDA neutral now, and we've made a commitment to the market. We'll hit the run rate by the end of the year of a consistent positive EBITDA outcome. And that's really just about reconfiguring our focus away from accelerating growth to accelerating the bottom line. Now, we can do that because we have great gross margins. Again, if you look at where we make money, our managed services are particularly profitable. Our professional services, you're going to see in our most recent quarter we're about to announce, are now coming back up to the levels we would expect. And our blended rate is really closer to 45, and our target is 50%. So we've got good gross margins that allow us to really manage and drive to that bottom line outcome that I know this market in particular is interested in. And the mandate we've given our business units is we really need to deliver that magic sum of 40 rule, but we've got to do it with positive EBITDA, and that's what we're aiming for in the coming quarters and the coming year. And again, the final thing I would kind of leave you with as it relates to kind of growth and capital allocation is we're very disciplined capital allocators. If you look at the deals we did last year, the prices we paid and the way we valued them, we're buying businesses last year on valuations that are being rewarded today in the new environment. So we've been fairly disciplined about the way we buy. We didn't go out and pay massive premiums to just buy revenue or top line. We're buying strategic capabilities, and we're paying the right kind of prices to get returns on those investments. We're really proud of these past 2 deals that have now continued to drive organic growth and are really accelerating the overall frictionless story. So again, really disciplined allocators of capital, driving great growth and ultimately leading to that bottom line that I think is becoming so important in today's capital markets. One of the things I would leave you with as well about this company is we did build it and designed it for a much bigger outcome. This company is being built to be $1 billion player. We're at 100 million today. We're on an accelerated development curve, and some of that comes back to the kind of team and people we've attracted from our executive team, who are all very experienced operators, many of whom have run much bigger businesses, to our board members, who again are all extremely competent, both strategically and from a board governance perspective. If you take a look at some of the people on our board, like Bill Morris, who's the former president of Accenture Canada, Ashley Aldridge, who's been, CIO and CTO of many Fortune 20 retailers in the US, Brian Beattie, who is the CFO of Valaris, which is one of the largest constellation companies in that business. We've got really exceptional governance. And again, we've gone out and attracted people to help us build $1 billion business, not to run a $100 million business. We could be absolutely more profitable if we were satisfied being a $100 million business. We could spend less in a lot of areas. Again, our ambition is much bigger and it stretches over the next 10 years to 15 years. And we're really on track from today forward to build that company and not just optimize for the short term. One of the reasons we wanted to come in and have these kind of conversations today is because we think there's a great buying opportunity. With the market correction that occurred, some companies got punished more than others. And if you look at our current multiples compared to our peer group, we think this is a great opportunity for folks to get into what is a great long-term play, but at today's kind of prices creates real value opportunities. We don't love comparing ourselves to professional services, but even using that as a starting point, you can look at our peer group in the professional services. They're running at 2.7 times enterprise value to sales, 8 times enterprise value to their gross profit. And most of that group runs at about a 30-ish% gross margin. We're running at 0.8 times enterprise value to sales. The one that really, caught my attention when I was looking at the market correction was we're trading at 1.7 times enterprise value to gross profit. And to me, revenue can be a tricky one because you can get a lot of lousy revenue. We've got great revenue. As you can see, that multiple on gross profit and the 46% margins. We've got high quality revenue, but I don't think we're really being recognized for that. So really today looks like it creates a great buying opportunity, and the conversations I have with investors are, we would never issue stock from treasury at these prices, but there are some people out there that are willing to part with the stock they have. And I think if you can get your hands on our stock at the prices we're at today, over the mid and long term, I think you're going to do very well. So we thought it was worthwhile getting out and talking a bit about our story. So that's us in a nutshell. We're a unique platform. We've got a great vision and mission. We're in multiple categories with product expansion capabilities. We've got great industry tailwinds and a very scalable business model, and a proven track record of doing acquisitions and integration, and a great balance sheet with runway to really do some more great acquisitions in this new market condition. So I'll turn it back over to you, Paul.
Perfect. Thank you so much, Bill. I want to remind everybody who's listening, if you've got a question you want me to ask Bill, feel free to use the chat function and we will ask that question. A couple questions I've got for you. One is really, how do you gain your business? Like, how do you go and get new customers? What's sort of the sales process? How do you get your business?
So we've got a number of different methods that allow us to build a very significant pipeline. First, in each of the business units, they've got strong relationships with terrific brands, and we co-sell and co-market with them. So our partners bring us into quite a number of opportunities, and I would say historically that's been one of our biggest growth paths, is through our partner relationships. We also, once we're into an existing customer, we have opportunities to identify other needs. So we might get brought in to help solve a data problem, and as they learn and understand other capabilities we've got, we then get an opportunity to help them solve other problems. So there's a bit of the land and then expand. And I would say upselling existing customers is another big part of our revenue growth and our bookings growth. Mm-hmm. And then the final piece is we actually have a pretty good idea who the customers are out there that match up well with what we do. And so our direct sales team has a go-get list. Companies that we admire, companies that we think would work well with us culturally and what their ambitions are to change their customer experience. And so that is a much longer selling cycle, but one where it's very much a Pivotree first relationship, and with no preconceived notion of what piece of software or what a software solution you might need, but rather what business problems are you trying to solve. So there's a real blend and a mix of how that first relationship starts. But then once we've got one of those top 500 customers that we talked about earlier, the opportunity to do more with them and expand share of wallet is quite significant.
And Bill, how do we look at this in terms of when you're going into a customer for the first time? Are you replacing systems that are in place, or are you building something from scratch for most of your customers?
I think it's fair to say at this point, Paul, nobody out there has no e-commerce. And so there's usually some form of replacement, augmentation, and really with the way that we do a lot of our design work now in microservices oriented architectures, it tends to become more of a modular approach. And so you might solve a business problem rather than rip and replace an entire system. In some cases, we're finding that we're getting brought into failed software implementations and we're being asked to help remediate it. With some of the IP that we've built that you saw in that video at the beginning, we are often brought in to augment the software that's there. We're doing some really exciting work with machine learning around auto categorization. And so again, sometimes the first introduction is somebody's got a PIM system or somebody's got a SKU building capability, and they want us to improve it, accelerate it, remove the errors, or lower the cost of running it. So really, it's on a full spectrum of everything from need a brand new system to fix a system to augment or improve the system they've got.
And when you're, I'll say, competing with other competitors, give us a sense of what those competitors look like. Are they larger? Are they smaller? What does that competition landscape look like?
Again, it really varies. And I think what, I was referring to earlier, most of the time when we find a competitive situation, it's in a business unit with a particular piece of software that's being evaluated to solve a problem. And so it might be, again, we're in a deal with Stebo and, we're trying to win that customer, and also at the table might be an Accenture or another boutique with a different piece of software trying to solve that problem. That's fairly common inside the business units. Once we're in, though, and particularly some of the ones we've been winning recently, what's differentiating us, there's a very big product information management system that's being pitched and looks like is going to be won. And we were brought in to help on the PIM, but because of our commerce experience, they actually asked to speak to our commerce architect to understand how all of that was going to connect into their commerce systems. The competitor at the table was a data competitor and couldn't have that conversation. And so that's where we're starting to see the differentiation, is when we can point to our understanding of how all these systems interconnect, and it can affect the way you think about these implementations.
Gotcha. And talk to us a little bit about any type of customer concentration. What's your biggest customer sort of generate in terms of revenue for you?
We don't have anybody that's over 5 or 6% now. And I think it's about our top 50% represent about 75% of our revenues.
Gotcha. Let's talk a little bit about your M&A strategy. So clearly you're out there looking for businesses, but how should an investor look at what you guys are trying to do? Are you trying to find product fit? Are you trying to find customer relationships? Give us a sense of what that looks like.
Yeah, we have a fairly extensive playbook, and we're always looking to optimize the number of features in an acquisition. And so the kinds of things we're looking for are skills that augment what we're doing, IP and recurring revenue if it's there. If it's not, the ability to get recurring revenue into that mix. A customer base that matches up with our desired customer base. So, we're often seeing SMB type solutions out there, but that doesn't line up well with our customer base. So we're really looking for a blend of all of those things. And then also, ideally, they've got the right margin profile. We will steer clear of anything that's south of 40% in gross margins, which is usually a good indicator of is what they're selling commoditized or is what they're selling specialized. So there's a number of factors that we look at, and we ideally, especially in a capital constrained environment, we're going to be much more selective. It won't be like 1 out of the 3. We want to see 3 or 4 out of the 4 characteristics we're looking for when we go to do an acquisition.
And looking forward, give us a sense of where sort of technology is going, or where's the pain points that you're seeing out there, and is there any new services or products you guys are trying to develop around this sort of new call it pain point?
Yeah, I think part of what we shared in that video is a number of different elements. So the data as a service business right now, which brings together 3 or 4 different pieces of IP that we build, is really about how we ingest data for customers in an automated fashion. And when you marry that up with marketplaces, which again, increasingly now are becoming a big part of the frictionless commerce experience set. If you've won a customer, you've got a relationship and they're now interacting with you, the more things you can sell them, ultimately the more profitable and the return on your customer acquisition cost is. We're seeing marketplaces becoming so important. Being able to absorb the volume of data that comes from marketplaces, transforming it and making it, really integrated to your own brand. If that's done manually, that's cost prohibitive. So really a lot of the work we're doing is data as a service, ingesting and transforming data using machine learning and automation. It's exploding. If you look at, again, some of our press releases, some of our big recent wins, the pipeline is really full of customers looking for that, creating that data currency. But the other piece is the control tower and connect. The big trend right now is obviously buying a lot more software as a service. And when you do that, you're now having to integrate these software as a service applications, and that control tower and connect and the advanced services that we've been building is about how do you manage a constellation of software as a service. You no longer have visibility into all of the components. In fact, it's quite opaque in many cases to the customer. You run the risk of not really understanding where the failures are occurring in your system. That's a lot of the work we're doing now, is how to connect those and integrate them in an effective way and give the customer a better dashboard of their ecosystem.
Gotcha. Now, you went public roughly 2 years ago.
We did.
How much money did you raise on the go public transaction?
We raised a little over $60 million. We had really big demand. In fact, we probably could have taken that number up even more. We were originally starting off looking for less, but the market seemed pretty excited about what we were doing. So we took more capital. We did repay the debt that we had on the books at the time. So that was part of the use of proceeds, was to clean up the balance sheet. And then we did go and complete a couple of acquisitions recently. And we still have cash left from that IPO.
I saw that, yeah. And just give us a sense, what's the insider ownership, and then sort of give us a sense of what the shareholder sort of base looks like.
Yeah, I think there's, again, been an interesting transformation. When we IPO'd, we had very big, long hold folks. And I would say that over time, and with some of the market corrections, that base of shareholders has now turned over. Now we've got some really impressive value investors. Again, and I think this is publicly available, you should be able to find that for yourself, but there's a couple of well-known value investors that have fairly sizable positions, both Canadian and American. We have a lot of inside holders. So I'm a significant shareholder. My chairman, a number of my board members are very significant shareholders, each of them holding, what's approaching 10% of the outstanding balance. And so there's a reasonable degree of concentration among insiders. There's a number now, in fact, again, one of those institutions is now deemed an insider based on their position. And then I think there's a long tail of smaller shareholders that have been following the story and have been picking up stock at some of these lower prices now.
Gotcha. What challenges are you facing? Like, what sort of keeps you up at night?
It's a great question, and thankfully, with the kind of team that I now have, I'm not awake at night on operational issues. I've got great operators that run the day-to-day. My challenge is really about getting alignment of vision, getting people to really understand where we're taking Frictionless, to get more of our focus onto those frictionless products. And it's a good problem to have, but I guided my corporate development and M&A team not to slow down on the work that they're doing. And as a result, we've got a really healthy pipeline of high quality acquisition opportunities at motivating valuations. And now the question is going to be, can I get access to capital at the kind of prices that I feel good about? I wouldn't issue stock from Treasury at these prices for sure. I still have some debt that we can use if we want to. It's a careful balance. I've got a really big, ambitious goal, and I'm looking at a number of really good acquisitions I could do that could help us accelerate that. And it's really trying to stay in check around. I don't really want to take any debt onto the balance sheet today if I can help it. I can't really raise capital at 350. I've got to start producing more cash so that I can take it out of the capital markets hands and use our own cash generation to do more of these acquisitions. Some of the sense of urgency, to be honest, Paul, is I don't know how long it's going to take for the market to recover, but I want to make sure I can get the good acquisitions done before it does. And so there's a bit of a sense of urgency on figuring out how to get some deals done while the opportunity is really ripe.
Gotcha. Well, you sort of spoke to my second part of the question here, is just that, I mean, are you seeing, call it, more motivated sellers right now, or is there more opportunities that are presenting themselves because this, you know, technically or untechnically, we're in a recession now? I don't know what the White House is calling it, but you know, what are you seeing out there that way?
Look, what I would tell you is the market started correcting ages ago, especially for small cap. It preceded, you know, the broader market correction. And private equity and private companies are usually the last to understand and appreciate those changes. It's so much easier as a private company to say you're worth whatever you think you're worth. And we saw that certainly at the beginning part of the year. I thought it might be a little while longer before the markets would really start to catch up on the privates. I can tell you the last 3 weeks, and I can't explain why, I can just tell you last 3 weeks, things have changed. People are now coming more aggressively interested in pursuing opportunities, more creative about what they're willing to do in order to get something done. I think some of them are starting to run into walls. You know, they are running out of capital, and they're seeing their ability to go raise capital. Many of them probably thought they could still get decent valuations, and I think we're getting through the first cycle now of folks getting unflattering term sheets and deciding, well, maybe now's the time to look for an exit rather than go through a major cram down and lose some motivation to go build the company for somebody else. So I can't put my finger on it completely. All I can tell you is we had a whole bunch spring loose now that are much closer to the valuations we would expect.
Yeah, that makes sense in this marketplace. Last question, sort of as an investor looking in, what do you think are the sort of either key metrics or key catalysts we should be really paying attention to show that you guys are, you know, executing your business?
I think in many cases it's a lot of the standard ones, right? Are we continuing to show quality revenue growth? And you know, that means, is our gross profit improving? One of the big ones I point to that maybe others don't look as frequently at is revenue per employee. And again, I don't think this is going to change overnight, but it's a really core metric for us in that it evaluates whether the software we're building and the tools that we're using is enabling each of our skilled staff to generate more value for customer. And over time, as you get more into product-oriented sales, you really should start to see that revenue per employee climb. And you know, years ago, we were running much higher in the 300,000+ revenue per employee. As we bought more professional services, as we got more folks, you know, in other parts of the world with lower cost rates, we started to see that number decline. We're now starting to climb it back up. And ultimately, I think that's going to be one of the real leading indicators, is how the business is transforming in the direction we've been describing. So, you know, I'd say continue to keep an eye on that revenue per employee. That's going to be a magic number for us.
Fantastic. Thanks for that. Okay, sort of we're wrapping up right now. We love to give you guys an opportunity to give a parting message, or more importantly, like a key takeaway. What do you want to make sure everybody walks away with knowing about Pivotree?
Look, I think it goes back to the summary we talked about earlier. We've got a really ambitious goal of being a leader in frictionless commerce. There's going to be a long tailwind driving this trend towards frictionless commerce. We're pretty uniquely positioned. We've got a good balance sheet that's going to give us a lot of control and patience as we pursue this ambitious goal. You know, for a small cap $100 million business, I think we're incredibly undervalued today. I don't expect that to last too long. So, you know, my parting message would be, take a closer look at us. You know, these kind of valuations aren't going to last, and I think we're going to be a great business and a market leader for, you know, a lot more than just the next couple of quarters. This is a long-term market leading build that we're on. And thanks for taking the time and listening to the story.
Oh, appreciate it. Thank you so much. We've been speaking to CEO Bill Nardo, Pivotree Incorporated, symbols PVT on the Venture Exchange. Bill, I want to thank you again for joining us today and look forward to catching up in the near future.
Thanks so much for having me, guys.